Hi, this is Daniela Cambone, and welcome back to StansberryInvestor.com. Earlier this week, Goldman Sachs put out a note saying that tax reform and not waning economic growth will be the biggest risk to the U.S. stock market. We're going to get Todd, Bubba, Horwitz's thoughts on this today. He joins me. He is back. Nice to see you, Bubba.
What's up, Danielle? It's great to be back with you as always.
Absolutely. I couldn't wait to get your thoughts on the looming taxes. And in what Goldman Sachs says, this is what's really going to hit the U.S. stock market. Do you agree?
I agree 100%. Listen, when you start raising taxes, you are starting to take the money right out of the pockets of the investors, which no longer allows them to put it into the market because, remember, we're not all the billionaires that get to borrow money from the cheap Fed and put it in the market. We're using our hard-earned capital. And when we start having to pay more taxes of that capital, it gives us less expendable income, which means less money for investing. So it makes a lot of sense. And of course, this administration with their stupid policies are going to continue to raise rates and continue to create more inflation on top of the higher taxes, which is another tax.
Okay, so let me ask you on that point of the U.S. stock market correction. It's interesting, apart from Goldman Sachs, we have Bank of America, Morgan Stanley, coming out saying they, hey, guys, folks, expect, a short-term correction here on the stock market. We could see it up, around the 10% mark. What do you make of this? Should we be listening to these Wall Street heads, Bubba?
No, that part I don't listen to. I mean, we don't, the price action on the market will eventually tell us when it's time. Like timing buying, timing selling is a fool's game. And the markets, when they start to break, you will then be able to have plenty of opportunity to participate in a down move when it comes. The usual problem for most investors is once they start to go down, they get nervous and they look for that same rally we have after every other sell-off. But you can tell there's things to watch for in the price action that will tell you we're going lower, which is then the time to sell and short the market and take advantage of the down move. Trying to say that it's going to happen, that is for fools who think that they can predict what's going to happen tomorrow.
Yeah, I think the concern is, if we look at the S&P up 506% since March of 2009. So I think the fear is, hey, it's not just going to correct 10%. Could we see 20%, 30%? 50% correction. If we do see some sort of correction, what would it look like for you?
Well, I think the eventual correction, Danielle, and I mean, I can't say when this is going to happen. I think you're going to see 50 or 60%. I mean, this is going to be really ugly when it comes. You've got so many bad policies that are in play here that there's the whole thing is actually, is the market really up? Or is it the money supply that the Fed keeps pumping in artificial dollars that's made the market go higher? And I think it's probably a combination of both. So I think you're looking at, when it happens, I think you're looking at a major haircut. We're talking 50, 60%.
Okay, so let me ask you this, Bubba. Earlier this week, I had Dr. Mark Faber on, editor of the Doom Boom Report. We all know him. And he said, look, the Fed is never going to tighten. They will never tighten. The only thing that could get them to tighten is a massive, economic meltdown or World War III.
The Fed is unlikely to ever tighten again, right, until we have a huge financial mess, until the whole financial system, political system, and until we have World War III. Nothing's going to change. They are here to print money, all of them. They're all money printers.
Do you agree with that?
Well, I don't think the Fed cannot tighten. Here's the problem with the Federal Reserve now. First of all, they become another arm of the Democratic Party. At this time, they become political. And, when you owe and you borrow so much money, look at how much money we had to borrow for these ridiculous stimulus packages. And, if they get this $3.5 trillion package packed, how are they going to hike rates? Because that means that the United States interest rate payment is going to be much higher. So it is almost an impossibility for the Fed to actually raise rates, although the market could easily accommodate higher rates. And there is a demand for money at higher rates that people are taking huge benefit of in a lot of the peer-to-peer lenders, some of the third-party lenders. They're cleaning up because they're getting huge interest rate payments because people are willing to pay because there's enough of a demand for money that interest rates should be at about 3 or 4% minimum right now.
Also on the note of Dr. Faber, he was saying that right now in this money printing environment, there's no place to hide. There's no safety. It's not bonds. It's not cash. It might not even be gold. Do you agree with that? Are there any safe havens right now that you're looking at?
Well, I'm a fan of gold. I'm a fan of silver and platinum. I mean, I think those are great safe havens. I think that cryptocurrency is a safe haven. Look, you have to be very careful in the cryptocurrency space because, of course, in the unregulated world of those, now that we like the unregulated part, but it's hard to want to take all of your money. But I think the normal asset classes that are producing money or at least act as currencies like gold, silver, and platinum, are great places to put your money because at least one thing, they will not lose the same value of everything else and they will maintain because they are hard assets. And of course, the crypto world can be very popular.
So that's interesting, calling cryptocurrencies a safe haven. Many people would disagree with you. So you don't equate volatility to safety. You don't mind, even if something's so volatile, doesn't necessarily make it safe.
No, I think that, again, you have to have a little volatility. First of all, a little volatility is always good for markets in the first place. Number one. Number two, if we look at the overall picture of the crypto space, there is no manipulation. There is no third party, changing the money supply, changing the value of your currency right in your pocket. The Fed destroys your capital as it sits in your purse or in your front pocket. So the issue here is that we have a ridiculous system that allows them to do all this manipulation with dollars because they need to create cheaper money to keep the government running. And if they would just let it go. Now, this government wants to get to universal basic income. So a lot of this is being done almost intentionally to create a digital currency for the United States, digital coin or stable coin, whatever you want to call it, that because they want to get away from all this because they don't want to have to account for all the trash of the lousy way that they run the entire economy.
All right. Last point I want to bring up. Earlier this week, it was the Met Gala here in NYC and AOC showing up in a tax the rich gown. Would you say this is a hypocritical move since to attend the event, it's a $30,000 ticket or a bold political statement?
Well, AOC is a hypocrite that hates America anyway. So yeah, I think it's an extremely hypocritical move. And I think the biggest point that all those tax the rich people miss is that the rich pay more taxes than anybody. And they're doing the same thing that every American citizen does, which is try to pay less taxes. Change the tax laws, change the tax code, and get some people that actually understand how to run it. And you wouldn't have people having a break on tax. But Warren Buffett is the perfect example. The guy makes $13 million a year. He takes $100,000 in salary and $12.9 million in dividends, which is taxed at a lower rate. So tell AOC and the rest of the America haters to get the hell out and not worry about the taxes because we all pay it. And every single American tries to pay less taxes.
Why did I know you'd have something to say about this? I'd be so
angry about it as well. How do you like that?
I just had a feeling. Todd Bubba Horwitz of BubbaTrading.com. Always a pleasure. Thank you so much.
Daniela, thank you. I appreciate it. It's great to be with you.
And thank you all for watching. We'll have much more for you on StansberryInvestor.com. In the meantime, don't forget to sign up for premier content you can't get anywhere else at DanielaCamboni.com. That's it for me. Thanks for watching.